Hey, what's up guys? Welcome back to Smart Wallet and Me, where financial wisdom matters. In today's video, I'm going to drop some really interesting news that just came out from the Asia market regarding electric vehicles. So let's get right into it. According to this Investors Business Daily article, electric car stocks fall as China signals crackdown and Nikola GM doubts grow. So according to this article, the Chinese government is cracking down not only on fintech companies like Alibaba and Tencent and JD.com, but they also now are looking at these EV companies because there's a boom of all of these companies that are just starting up because of the great demand. And so China's top economic planning body has launched a nationwide review of EV projects. Specifically, the National Development and Reform Commission has asked local branches of Evergrande Auto, which is one of the second largest companies in China regarding real estate, to submit investment and production data for the past 5 years. So a lot of investors are now worried that if this is just the beginning of something much greater regarding these investigations, like with Alibaba, where they ran a anti-monopolistic investigation on them. So guys, is this the beginning of something much greater, where the Chinese government is now cracking down not only on Alibaba and JD and other fintech companies, but they're also now trying to crack down on EV companies because there's such a boom of these projects that are growing in China, like these companies here: BYD, XPeng, Li Auto, NIO, Nikola, and even General Motors in the United States is now involved with this as well. And if the Chinese government is trying to crack down on these companies, what does it mean for these other automakers in the electric vehicle industry? So that's the real topic right here, because if history is a lesson for us, and we saw what the Chinese government did to Alibaba by creating more regulations on them, trying to thwart any kind of monopolistic environments, this should be another red flag for the EV market, because they are now trying to crack down. Now again, Evergrande Auto is one of the second largest companies in China with real estate, and this is just the beginning. It might be, I'm not sure, I don't know. I just want to pass down the information to you guys so that you guys can see what's really going on over here. Industry watchers took that as a signal that Beijing wants to rein in China's booming but problematic market as electric car stocks proliferate rapidly. Evergrande alone has spent tens of billions of dollars in just the last 2 years with the goal of becoming a powerhouse among China's electric car stocks, Nikkei added. Also, shares of Nikola sank 12.3% to close at $30.24 in Wednesday's stock market trading. That's a huge fall. And there's going to be more talks with GM, but nothing has been certain. And I think there's a deadline until December 3rd for them to come up with some kind of agreement. Otherwise, both parties can walk away from that agreement. And it is yet to be seen what will happen with Nikola. Another electric car stock, NIO stock, reversed higher to finish up 0.3%. And BYD fell 3.6%, Li Auto lost 7.4%, and XPeng Motors dived 9% today. And on Wednesday, JP Morgan analyst Paul Coster expressed doubts that Nikola and GM would reach a partnership deal. So guys, there's a lot of negative news coming out regarding these electric vehicles. That's why the stocks are tanking down. It is something yet to be seen what's going to happen. And yet there's another article that I want to share with you guys from Nikkei Asia. And in this article, it says Evergrande units shares hit by report of Beijing EV investigation. Like I said, guys, if history is anything of a teacher for us, we need to be all ears and listen up, because as we saw Alibaba shares fall because of the investigations and the regulations that the government put on it, we should also be careful with this EV industry, because the Chinese government is now putting more pressure and trying to investigate these companies because they're growing too quickly, too fast. China Evergrande New Energy Vehicle Group, also known as Evergrande Auto, fell as much as 11% in Hong Kong before closing 5.2% lower at $22.80. According to an official document obtained by Chinese business publication Nikkei, The National Development and Reform Commission has asked local branches to submit investment and production information for electric vehicle projects in their territories over the past 5 years. That's huge, guys. They're going to be going back 5 years to investigate this company alone. And it is yet to be seen what's going to happen with the other smaller companies that are just coming up right now with these other smaller EV stocks that I just mentioned. Specifically, the commission demanded details of projects involving Evergrande Auto and Shenzhen-based conglomerate Baoneng Group, including the amount of land they had occupied, development progress, and total investment made. Industry insiders said the investigation has a signal that Beijing wants to rein in the booming but problematic sector. Looks like China is making an effort to regulate the EV sector, said Cui Dongshu, Secretary General of the China Passenger Car Association. EV companies have multiplied in China over the past few years thanks to generous government subsidies amid calls from Beijing to fight air pollution and cut fossil fuel use. Local governments race to host EV projects, hoping to nurture homegrown champions in an industry promoted by Beijing. And going further down in this article, China's eagerness to develop the segment of the EV market has led to many chaotic practices. Some companies stay afloat solely on government subsidies or are accused of acquiring land at low prices in the name of developing EV projects. So there's a lot of shenanigans going on where a lot of companies are trying to get into the EV industry just to get these government subsidies or to buy land at lower prices, where in fact they're not really developing EV autos at all. So the government is now cracking down on them and trying to slow down what is really going on, because there's a lot of chaotic practices according to this article. Evergrande, founded and controlled by Xu Jiayin, sorry if I'm mispronouncing his name, China's third richest man, has positioned itself as a serious competitor in China's EV race. Despite venturing into the sector just 2 years ago, the property developer has spent tens of billions of dollars on acquisitions, research and development factories, setting the goal of becoming the world's largest and most powerful new energy vehicle group within 3 to 5 years. That's a huge endeavor to put yourself in, and they might actually reach it, but they need to first be regulated and make sure that they're not cutting corners and doing anything that is going to jeopardize their investments. In August, Evergrande NEV unveiled 6 models covering all major passenger car categories, including a sedan, an SUV, and a multi-purpose vehicle. And the first model is expected to reach the market in the second half of 2021. And according to this article, the stock prices of Tesla and Chinese startups XPeng Motors, Li Auto, and NIO have surged in the US this year, taking their market capitalization above that of many much larger traditional automakers. So they're actually growing by leaps and bounds over much larger traditional automakers in China. And so there's something going on where this group is really growing faster than the traditional groups are. Unless those traditional automakers change their philosophy and change the way they do business, they might lag back. They may fall back down further if they don't come up with the demands of what people really want, which is electric vehicles. So guys, this is going to do it for now. I wanted you guys to be aware of what's really going on, why these EV stocks are going down. There's a lot of talk about the Chinese government cracking down on a lot of companies, not just Alibaba, but even the EV companies that we just spoke about. So guys, if you guys like this video and if you guys found it informative, please give me a thumbs up. It would really help this YouTube channel to grow, and it would help the YouTube algorithm to push it out to others who might be interested in learning about this. I would greatly appreciate it, and I really thank you guys as well. And I'll see you guys in the next video. Thanks for watching.